Hello friends, I'm Dr. Shamsuddin. I welcome you financial accounting classes. In this class, I'm going to discuss financial questions and answers relating to financial statements of sole proprietors. Let us begin the class. Unit 2, Financial Statement of Sole Proprietors. In this unit, the topics covered are introduction, meaning of sole proprietor, financial statements, trading account, profit and loss account, and balance sheet. Questions and answers. Define a sole proprietor. A sole proprietor is a business owned and run by one person, where the owner and the business are legally the same. The proprietor has unlimited personal liability for business debts. What is the accounting equation in a balance sheet for a sole proprietor? The accounting equation is assets is equal to liabilities plus owner's equity, that is capital. What are two main statements comprise the financial accounts of a sole proprietor? The income statement comprising the trading account and profit and loss account and balance sheet. These are the two main statements included in financial accounts of a sole proprietor. What does the trading account determine? The accounting, the trading account determines the gross profit or gross loss by focusing on direct incomes and expenses of buying and selling goods. Trading account is mainly prepared to find out gross profit or gross loss by considering all sales and purchases and other expenses relating to trading. What does the profit and loss account ascertain? Profit and loss account ascertains the net profit or net loss after accounting for indirect incomes and expenses not related to goods trading. Distinguish between the trading account and profit and loss account. Trading account records direct transactions, opening stock, purchases, direct expenses such as carriage and wages, and closing stock to compute gross profit or loss. Profit and loss account includes indirect revenues and expenses, that is rent, salary, depreciation, and computes net profit or loss after gross profit from the trading account is transferred. Explain the purpose of balance sheet in the context of a sole proprietorship. The balance sheet provides a snapshot of the financial position on a particular date. It lists all assets, liabilities, and owner's equity, showing how resources are financed through liabilities or owner's investment and reflecting financial health. Highlight two formats used for presenting financial statements of sole proprietors. First one, horizontal, that is a T form, trading account and profit and loss account side by side, debits on left, credits on right. Balance sheet shows liabilities plus capital on left, assets on right side. Vertical report or single column. All items listed vertically in sequence. Gross profit, net profit, then capital. Similarly, sources listed before application in the balance sheet. Why is closing stock important in preparing final accounts? Closing stock valued at cost or net realizable value, whichever is lower, is credited in the trading account and shown as a current asset in the balance sheet. It helps compute correct cost of goods sold and thus accurate gross profit. Drawings are deducted from capital, not shown in the income statement. Outline the step by step process for preparing final accounts. of a sole proprietor from trial balance to balance sheet. The first step, prepare trial balance. It summarizes all debit and credit ledger balances, ensures they tally before drafting final accounts. Second step, trading account. Transfer direct incomes and expenses, that is opening stock, purchases, direct expenses, and sales. Deduct all closing stock to compute gross profit or loss. Third step, profit and loss account. Transfer gross profit or loss from the trading account, then add indirect incomes and subtract indirect expenses to determine net profit or loss. The last step, balance sheet. It lists assets, closing stock, receivables, and liabilities, that is payables. Then owner's equity, that is opening capital plus or minus net profit or loss, minus drawings. Balance using assets is equal to liabilities plus owner's equity equation. Explain how the balance sheet reflects the financial health of a sole proprietor using a real example approach. The balance sheet prepared as of a specific date, for example, December 31st, categorizes current and non-current assets and liabilities. It then shows capital reflecting accumulated profit minus drawings. The difference shows owner's equity, highlighting liquidity, solvency, and funding structure. For example, an increase in current assets and reduction in liabilities would indicate improved liquidity and financial stability. Describe the significance of final accounts for a sole proprietor. Final accounts reveal business performance via gross profit and net profit. It provides a clear view of financial position via balance sheet. Inform decisions like expansion, investment, and loan applications. It helps with tax preparation and compliance. These statements help assess whether the business can meet obligations and sustain growth. The sample questions and key topics covered in this session are: define accounting, that is covered in definition, cash versus accrual, Indian accounting standard abbreviations. Branches of accounting, 5 marks questions covered, types of accounting and their uses. Objectives, qualities of accounting are covered from record keeping, decision making, characteristics. Accounting process, conceptual framework, which is for 10 marks, covered from comprehensive workflow or framework significance. Cash versus accrual, covered from in-depth comparison and implications. Thanks for watching. Jnaname Vajayate. Jai Hind.